This is Tim Lee from LendAPI. I don't have a guest today, but I want to do a solo take on some of the things that just happened this morning from Washington, D.C. Specifically, we have a EO, an executive order from President Trump on Fintech. This is massive, and it's I don't think anybody really predicted it that he's going to announce something like this, or he's ordering the various government agencies to do something like this. So essentially, the UNO says we got to make fintechs more plug into the Fed's system. Traditionally, fintechs, lenders, payments, crypto, maybe this has a crypto agenda because he's really big on crypto, have to go through banks in order for you to access rails of any sorts, ACH, debit card, credit card. That's a different story, but ACH, for example, payments, you got to go through a bank. And if you want to do a lending, you got to go through a bank. If you want to take on deposits, you got to go through a bank, right? For all probably good reasons until now. So what's happening now is that he issued a executive order ordering all of the regulators, like the SEC, CFTC, OCC, FDIC, including the CFPB, within 90 days, he wants all of these agencies to audit their essentially rule books, supervisory guidelines, and licensing processes. This is very important. And find anything that's, according to EO, unduly impediments that fintech firms has go through, including digital assets companies, right, have to go through to get access to the United States banking system. This is massive. Basically, he's telling the regulators, hey guys, probably heard enough complaints from fintechs to say, it's too difficult to get access to any of the federal rails for payments, crypto, lending, or et cetera, et cetera. So they want these supervisory entities kind of examine their policies and say, can we make it easier for fintechs? And they have 90 days to do it. It's pretty nuts. And in between the lines, he also said that, hey, look, if fintechs, or if anybody really wants to be a bank, regulators, are you making it difficult for people to become a bank? Which is really interesting because, for the past, I guess, 70, 80, maybe 100 years, to get a charter, you got to go to the OCC, maybe some of the other regulatory body if you want to become a credit union. But now he's saying he's pushing these regulators and make it easier for people to get a bank charter. I mean, we've seen a lot of fintechs going into the motions of getting a bank charter. So this according this executive order, that he wants regulators to make it even easier, or at least examine the process to do it. Then the executive order went on to say within 120 days, the Federal Reserve Board of Governors needs to go and do this kind of a similar comprehensive examinations of all the non-bank fintechs and the non-FDIC insured depository institutions like crypto and trust companies, if you will, right? To see if they can gain access. This is crazy. Gain access to Reserve Bank's payment rails and master accounts. I know a lot of people have laid down their careers to fight for this access, but he's finally made an executive order for the Federal Reserve to do this. But the twist here is interesting. Because there are 12 different individual Federal Reserve banks, San Francisco, New York Feds, and all that stuff, right? He also want them to tell us, well, I guess we can tell that if there are any inconsistencies between these Federal Reserve boards and their sort of allowance, right, for people that can access, the Federal Reserve systems, namely all the things we kind of talked about, which is kind of interesting, right? If there are giant differences, fintechs or anybody could do a little bit of regulatory shopping, meaning that if if the Missouri, St. Louis Federal Reserve Bank has a slightly easier process, right, then everybody will move over there. Or San Francisco may have a different process. People will move over there. A little bit of a jurisdiction shopping. which is kind of interesting. This will get probably massive amount of pushback from regulators, banks, probably citing systemic risk and financial stability and all that stuff. But this is a massive pro or win for fintechs. Basically, the plumbing is old. It's probably creaking, cracking. And a president wants to sort of unbend or destroy the old plumbing and have fintechs or technology companies go essentially become a bank and have access, or at least have access to all of the banking systems for payments, again, licensing, all that stuff. So he's in a hurry. Don't know what's going to happen, but keep an eye out for the next 90 days, 120 days.